All right, why don't we start off with one name that you see as a potential loser in this scenario, and I think it's pretty interesting. You say it's Meta. What's the setup with Meta that's making you so concerned?
Yeah, I mean, I think Meta has an issue, right? I mean, AI assistant, like they talk about 1 billion user exposure. That's not necessarily usage compared to kind of like ChatGPT or Gemini, where users actively take to. So like most of Meta's kind of like next year's ad story is centered around Meta AI assistant usage. And we're also kind of like on the side of that, we're also missing the go-to-market for Llama, while the current spending levels, and here it gets really interesting, both looking at the OPEX and CAPEX trajectory and assuming already a trimmed down kind of like buyback pattern, Meta actually runs out of cash, tapping into net debt territory by 2027. And that faces Google on the other side with kind of like the omnipresent Gemini that is getting integrated left, right, and center, potentially even backing like Siri on Apple. And so on.
All right, so you're jumping to Google, but you actually say that Amazon has the least to lose if this is a bubble. You're saying their robotics investments and also obviously their retail business kind of cushion them from this. But at the same time, the fact that they don't have LLM investments, doesn't that put them at risk of being left behind?
Yeah, you're right. I mean, Amazon is least exposed if a potential bubble is to form, as there is no LLMs. And they have the lowest exposure to AI within cloud as of now. But I think moving into next year, right, and like also looking at the Anthropic numbers that they have given out themselves, like the AI exposure is going to rise significantly. And I think there is a catch-up happening on AWS side where we model kind of like 21% growth versus like the street being at 19. But you're right. In case of a bursting bubble, Amazon has the widest diversified business, especially when you also think about like the retail offering, AWS, and so on.
But Rocco, don't they have the most to lose if it's not a bubble and this becomes something that's transformative? Again, the company announcing 14,000 layoffs of corporate workers just a short time ago.
Yes, and I think this is not the last kind of these announcements across big tech that we have heard this year. But what I would say, right, I mean, go back to like the mid to late 22, where Amazon had to fight like a massive overcapacity in their retail warehouses setup. And they were just simply sidetracked of what happened at Microsoft and OpenAI in that partnership. And they were just simply late, some 3 to 4 quarters versus Microsoft, 2 to 3 quarters versus Google GCP in starting to build that AI infrastructure. Yeah, but there is no structural reason for them not to kind of like catch up. And I think 2026, with all the infrastructure, Project Rainier, or the others in Oregon, Pennsylvania, North Carolina, all being $10 billion plus investments starting to come live, AWS is set up for a catch-up.
All right, to your point, according to this report, you say a lot of these big tech companies are not great capital allocators. You point out to Meta's investments in the metaverse and just what you mentioned, Amazon's build out of its warehouse facilities. I want to go to two names that you see as the two of the biggest potential losers. That's NVIDIA and CoreWeave. Obviously, they're very closely tied together. I want to ask, why do you see them as potential losers when every time we hear one of these companies report, it's capacity constraints, that's really their issues, and it seems like they could actually grow their revenues more if they had the ability to create more chips?
Yes. I mean, just to reiterate that, right? I mean, like a bursting bubble is not our base case, but it's worse to kind of like think through the rank order of exposure. And you heard me kind of like putting Amazon, probably Apple, on top of like the least exposed companies. But then certainly like the more pure play AI, like companies out there, which certainly is NVIDIA, and even more so CoreWeave. Where you can actually ask or that there is an active durability discussion around these companies, around like CoreWeave. Like anyhow, but their exposure to AI, like if like someone like a Meta kind of like runs into some kind of like financing issues like down the road, where to cut CapEx spending, then that is kind of like a bubble cracking, and the pure plays like AI, like NVIDIA and CoreWeave are likely to have the most to lose here.